Good day and welcome to SBR&x Insight, where we talk about what's really going on in the world of the BRICS and Russia. Now, my name is Rod Mackenzie, and today I want to talk about a recent survey of 75 central banks worldwide, which has illustrated a serious reorientation of financial flows with a shift away from the dollar towards gold, the euro and the yuan. Now let's recall that Russia pioneered this trend over a decade ago after sanctions were introduced against it after the reunification of Crimea. And since then, China and other countries have adopted similar strategies in adding and stockpiling gold to their reserves. Now this shows there's growing evidence of a reduction in the dollar in the world's central bank reserves. So, what are the reasons for the growing dissatisfaction among countries with regards to using the dollar for their exchange reserves? Well, as I said, the survey of the 75 central banks was conducted between March and May, and it shows how the tariffs imposed by US President Donald Trump on Liberation Day on April the 2nd have affected the financial reserves policy of central banks around the world. Now, the ongoing trade tensions have resulted in market volatility, leading to a decline in the value of the US dollar and US treasuries. Now, this has prompted central banks worldwide, which hold significant dollar reserves, to reevaluate their funding strategies and transition away from the dollar in favour mostly of gold, but also the euro and the Chinese yuan. Now, this was reported by the official Monetary and Financial Institutions Forum, the OMFIF. Now, before I continue, I would like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website, SBR&x.com, and that will contribute to its further development. You can do this by making a small donation, which you can do by clicking on the thanks button at the bottom of the video screen. Everybody who donates does get a personal thank you from me, and I'm thanking you all now for watching. Do keep the comments coming. Love to read them, love to respond to them. Now, it's estimated that around 40% of central banks are planning to increase their gold reserves further over the next decade. Now, the dollar, which has been the most popular currency purchase over the last few years, has fallen to 7th place this year. According to OMFIF, plus 70% of the respondents indicated that the current political climate in the US is deterring their investment in the dollar, which is more than double the number of respondents who expressed a similar concern a year ago. Now, among the currencies that stand to benefit most from the dollar's fall is the euro and the yuan, and they're expected to increase their holdings over the next 12 to 14 months. I mean, 17% of central banks surveyed by the OMFIF are planning to increase their euro and yuan reserves over the same period. Now, this will make the euro the most sought-after currency after the dollar, up from 7% a year ago. Now, the euro is followed by the yuan, but over the next decade, it's expected that the yuan will become a currency of choice, particularly in Asia, with 30% of the world's central banks expecting to increase their holdings of the currency. Now, it's estimated that this yuan share of global reserves will double from 3% to 6%, according to the IMF blog. Plus, the US dollar share of foreign exchange reserves has decreased by almost 25% over the last 20 years. I mean, back in 1999, the dollar accounted for more than 70% of global reserves, but now, by 2023, it's down to 57.3%, and that's a historically low level. Now, in recent years, most banks in developing countries have increased their focus on gold. This year, it's overtaken the euro and become the second largest asset in central bank reserves, and it now accounts for 23% at the end of 2024. Now, its growth can be attributed to a number of reasons, but the record purchases of more than 1,000 tonnes annually since 2022, and the almost doubling of its value. Now, the dollar share continues to decline, and seemingly in 2025 has now dropped to a low of 46%, according to Alexander Potavin, who's an analyst at FG Finance. Now just remember, Russia became the main trendsetter after this, after the West, led by the US, froze its foreign exchange reserves. So the process of de-dollarization has been exacerbated by the ongoing trade wars that are instigated by the US and the persistent growth of the US national debt, which worries a lot of people. Now, as we said, Russia was the first to begin the de-dollarization back in 2004, and then the Yuan was prioritised due to its status as one of the primary trading directions available to Russia following the implementation of the shock and awe and record number of sanctions, some 20,000 that were imposed against Russia. However, the yuan is not the only currency used in these transactions, and other countries, friendly countries of Asia particularly, and the rupee, according to Mikhail Gordienko, who's head of Sustainable Development Finance at the Russian Economics University. Now, between 2018 and 2020, the Central Bank of Russia made significant changes to its composition of international reserves, and it reduced the share of the dollar, increased the share of gold and yuan. In the light of the rising gold prices, this strategy proved to be extremely profitable. Now, currently, the share of the Russian Federation's reserves of gold is now 25%, and then if you take it in the terms of the value, it's got a huge profit. I mean, most of the gold was bought at around 1,200 to 1,400, and maybe as much as 2,000, and now it's 3.5. So analysts are confident that this trend towards de-dollarization is only going to gain momentum. If gold goes up and dollars go down, it's logical to buy gold, isn't it? Now, events have already led to the demand for gold by some of the central banks of African countries for the purpose of restoring their financial sovereignty. Plus, the Central Bank of China made record purchases both officially and through third-party market participants. In fact, nobody actually knows what the real true figure in China and its gold reserves is. Now, plus it's also estimated that up to a third of the world's central banks are planning to continue to increase their gold holdings. And that's indicative of a crisis in the global payment system and the desire of states to play it safe in the event of a breakdown of the current economic system involving currencies. Now, according to Mikhail Gordienko, he says the primary reasons are not only political risks and sanctions or the precedent of the freezing of Russia's gold and foreign exchange reserves, but also the growing role of Southeast Asia and China in the global economy. The change in currency trade corridors and the growing distrust of the dollar as a neutral reserve asset has now become plain. Now, I don't believe there's going to be a collapse of the dollar, but what we're seeing here is a slow but systematic shift towards multipolarity and the use of domestic currencies within trade relationships like you've seen with the yuan and the ruble. Meanwhile, the dollar exchange rate has seen a decline in the first half of 2025. In the first quarter, the DXY index, the dollar index against 6 world currencies, fell by 4.6% and an even greater margin in the second quarter by 5.3%. So by the end of June, it had fallen to its lowest levels in the spring of 2022. Now, there's obviously nothing critical in the weakening of the currency as yet. I mean, during his first term, Trump expressed a preference for a lower dollar rate, and at the beginning of his second term we observed the recurrence of the same scenario. Conversely, Democratic presidents typically start their tenure with a weak dollar, which subsequently appreciates in value. Now, that's according to Potanin, and according to his forecast, in the third quarter, the dollar is expected to weaken again by further 3% against the basket of world currencies. So what further issues are being experienced with the dollar in relation to central banks worldwide? Well, the primary reason for all of this, of course, is the politicization of the dollar, the growth of sanctions risk, the high volatility, and the uncertainty of US economic policy. I mean, since 70% of the central banks surveyed in the OMFIF study noticed that the political situation in the US discourages them from investing in the dollar. That's the key factor. Now, the chosen alternatives are determined by the direction of the trade flows. In Asia, the yuan is the primary settlement currency. In the West, now particularly Europe, the euro is favoured for its stability and alleged neutrality. Now, gold is recognised as a universal asset that operates outside of political influences and always been a safe haven. Plus, gold recently has demonstrated remarkable levels of growth and set new record highs. Plus, gold is not subject to sanctions as other currencies, and although it's less convenient for physical transaction, and that's where the risks lie. So some institutions in the financial markets offer digital assets to eliminate the physical movement of the gold and at the same time simplify settlements. And that's according to Mikhail Gordienko. Now, it's important to note that there are inherent risks involving replacing the euro and the yuan. Despite the euro's liquid debt market, which is valued at almost 11 trillion euros, being a significant asset, there's also a notable risk of a political and consequently financial and economic breakdown of the European Union. Now, also there's risk for the yuan and the significant control over the currency by Beijing so it can revalue or devalue. But the yuan is actually exported and supported by China's expanding trade relations with the entire world. Plus, it runs a huge trade surplus, so it's unlikely that it's going to be there. However, over the next decade, the composition of global financial reserves in central banks is going to become more balanced. I mean, as I said, the yuan could continue to double its share, gold will remain a safe haven, and the dollar share will continue to decline, but I think it will hover between 45 and 50%. Now, this will reduce the reliance of developing countries on US currency risks, strengthen the role of regional currencies, and stimulate the development of cross-border settlements in national currencies. And I believe that the global financial system is moving away from the dollar currency to a more diverse and inclusive financial landscape of multipolarity. The global monetary system has essentially already reached a level of multipolarity, and it only remains to refine and change the various payment systems and instruments, which is currently being carried out particularly by the BRICS. Now, in this system, gold is universal, unconditional assets that enables the insurance and preservation of a state's financial resources. The euro will continue to be used in demand within the EU, and if the EU's current structure is maintained over the coming years, then that will still happen. However, there are risks of the strengthening centrifugal processes, evidenced by the various protests in Brussels from Western and East European countries with lowering standards of living. The yuan will continue to be the primary currency of the trade in the Southeast Asia and its neighbouring countries. And the ruble and the yuan will continue to be the main currency for trade between Russia and China and within the Eurasian Economic Area. So that's how it is. Thanks very much for watching. Please like, share and subscribe. And if you want to help me out, click on the thanks button at the bottom of the screen. Thank you.